screen real quick?
Yeah.
All right, we are live. There we go.
Yeah, I mean, it's just like not even like I guess day to day, but like hour by hour, quick shifts in market. That's why I trade. I mean, I said the market moves fast these days, man.
Mm-hmm.
It's the living, breathing Mr. Market. Gap City.
Uh-huh.
Oh, I said city, not Siri. Let's get one CCJ. I think BitDeer reported earnings, didn't they?
Yes.
They did. How they do? It looks like it just looks like regular.
I got that flagged on my flagged list on my for my weekly chart scan.
Yeah, I mean this is a nice little remount, little double bottom right there, $20. Um,
That's their earnings right there in the chat.
There we go. 174% year-over-year revenue growth. Okay. Positive EBITDA, gross profit. Monday also reported earnings down 20%. And then PGY reported earnings as well. This is up 21%. They had a big beat on EPS. I don't know why, if that was like a one-time thing or not, but let's see, PGY is gapping up here. I'm going to put it into. Wait a minute. There we go. All right, Gay, good morning.
Good morning.
Okay, so I'll start off. The QQQ is we're gapping up 1.5% this morning, following that big reversal on Friday midday. So Friday was interesting because in the morning we were talking about how the market had a pretty reasonable chance to find some supportive action. just given the closeness of the 50-day moving average on the Qs and on SPY. And then I was really looking at this weekly at the weekly 9 EMA or 10 SMA or 8 EMA, whatever you use, as well as this, little channel here that we've essentially traded in, this channel since the May gap up for the most part. And if bulls were to step in, that it would be a very logical spot to do it. And then throughout the day, really until noon, right after noon, is when we kind of finally turned after some pretty nasty selling on the indexes. We are down an additional 1.5% since open. After already gapping down about 0.6% on the day. So we were down over 2%. And this was after, a really nasty day Thursday, nasty day Tuesday, whatever. And then the market turned, right? The some of the headlines coming out about the government shutdown possibly ending and Senate getting on board. It really started to gain see multiple headlines come out and massive recovery into the close. I posted a note about just some of the challenges of trying to navigate some of the action last week. With a few of these up down up down up down type of action and the speed at which then the end of the week occurred. And now we've got a big 1.5% gap up to start the week. Really interesting. We're sitting right at flattening out 90 May. We are above the 20 May here to start the day, which is good. Really curious as to how we trade today. Probably for the first, actually guaranteed for the first bit of time, I'm going to be just kind of continuing to observe the action. It's going to be really tough if you just rip right all the way up into the 624 to 627 little bearish gap area from Tuesday to Wednesday last week. It's gonna be really tricky to navigate, and I think it's gonna be really tricky to navigate in general, because anything that wasn't bought on Friday's reversal and pretty early on in Friday's reversal is pretty far away from ideal buy points into some support areas. So that leaves us kind of in between. We posted sent out Sunday scans yesterday afternoon, kind of detailing a lot of the ETFs, just going through some thoughts. We love writing this every weekend. I think it's extremely comprehensive of the market action from the previous week and looking forward to the week ahead. So I hope everyone here takes the time to read this. I'll always try to put in a couple different like little lessons, little takeaways, little golden nuggets, if you will, from the last week. And one thing that you wrote about was some of the limitations of trying to define the broader environment rather than kind of being open to a variety of scenarios, which we often talk about, right? Mapping out those scenarios and kind of being as prepared as you can be for that. It's hard to be on your game 100% of the time and dialed in, is especially when protecting your mental capital and sometimes walking away can be best. But anyways, and really tried to push towards a mindset of defining the environment via defining your personal subset of opportunities that you see on the horizon, meaning your watch list, right? Subset of opportunities on your horizon really just means your watch list. And because that's very important because I listed like what if the QQQs are or whatever is above all moving averages and trading perfectly, but all you can find on your watch list of actionable stocks is like REITs where you can reasonably risk. Like you're not going to want to force yourself into something suboptimal because of this need to participate uh, due to some definition of exposure over this and that. So just really important with that. This coming into this week personally, um we talked about the one good trade mentality, and that's really just personally where I'm at, is that I am looking to take one good position at a time. That doesn't just mean like, oh, one this week, one next week, one today, one tomorrow, right? It just means that, the next really just high quality setup, catalyst, PR, earnings gapper, tight consolidation, whatever it may be in a group of with relative strength, is going to be my focus, is just finding something really good that I can, simply and clearly execute and go and see the results and see that through and then on to the next and then piling that up one after another. As I get cushion and my stop is moved to break even, I'm able to trim some off into strength to reduce my risk and then trail the moving averages, etc. So that's really for the most part where I'm at. Listed some really interesting, really nice setups in my area. Covered some nice charts. Uh, Unity probably is one of my more favorite looks right now. Earnings gap up, inside day, undercut the inside day, dancing right around the 50 SMA. That's flattening out in this little base. Really interested in this. Going to be watching the hourly pretty closely. I'm considering this. I'm putting this in the same ballpark as that delayed reaction of QS back here in September, of TEM back here in early August, of HIMS. I listed all those dates and Sunday scans if you want, if you hopefully you went back and looked at them. But really looking for Unity to put in that little 3-day, 4-day delayed reaction. And we'll be interested in taking this. So this is gapping up 2%. Ideally, we get a little bit of little wiggle on the hourly here, or pullback that holds the 50-day moving average right down here at $40 flat, essentially $40.10 maybe. So I'm going to be watching that pretty closely, almost exclusively.
There's a couple of
Just
those that gapped up on earnings and kind of put in that delayed reaction pattern on just because of the market's weakness the last couple of days of last week. Like Rivian is like almost kind of like identical to that.
yeah. What was the other one? There's like oh, there's AIP kind of similar too, right here, up near highs. This is an interesting one. They've
Yeah,
got some.
Zeta, ZETA.
Yeah, Zeta had a sick hammer on Friday. Um, what else was there? Not Black Sky. There's one other one. Um, it's on my list somewhere. Anywho, um, yeah, there's not really any other ones that I want to go over. If I'm being honest, that Unity is probably going to be a lot of my attention this morning, and then a variety of the battery stocks that I listed. Really want to get another piece of that, whether it be SLDP post earnings, kind of similar, really nasty day afterwards, but whether it be QS, FLMC, EOSE, which is probably the best looking one. And yeah, so and then I'd say the only other area of the market I'm watching is kind of this, cloud and cybersecurity area that we've been focused on. Zscaler, Snowflake, CrowdStrike, MDB. MDB really nice, holding in at the 20 May. And Net, you could throw in there, Twilio as well post earnings. So that's pretty much what I'm looking at this week, and I want to hear Brocco. Um, what's high?
All right, sir. You want to bring your screen down? I'll pull mine up real quick.
Yes.
All right. Yeah. Good morning, guys. Um, yes, we got no notable economic data today. Um, Obviously, the narrative has shifted quite a bit over the weekend. A lot of talk on the the government shutdown and the stimulus checks as well. Um, I will say for anyone that does trade a cash account, tomorrow is a national bank holiday. So any trades executed today on a cash account, that cash will not settle until Wednesday. So just a reminder for anyone that needs it. Um, but yeah, big gap up on a Monday. I'm not gonna lie, guys. Just based off my personality and the way I like to trade, I do not do well on big gap ups on a Monday, especially uh, on the spot right in the market. I kind of described it in our Sunday scans post as kind of feels like we're at that like oversold bounce spot after this was a pretty sharp pullback on the Qs, especially the Tuesday through Friday of last week, and we're already 3.5% off of Friday's low, which is a really solid amount. Now I will say, I would love for this to pull back a little bit and get some higher lows, some volatility contraction below the moving averages, maybe even fill the weekly gap at around like 610 ish. But one thing I do have in mind that I did post about in Sunday scans that I think is somewhat important. I just pulled up kind of the tweet that I posted yesterday after Sunday scans, but it was this put call ratio, and this is something that I track in my market health sheet that I've tracked pretty much all year long, and it's basically just calculates the number of puts versus calls being traded, and anytime it gets over 1.0, there's more put volume than call volume. Doesn't happen very often in uptrend. You see it very rarely. It's only happened 3 times since we came out of the correction in April. And, typically it's very accurate at marking a low in an uptrend when this put call ratio spikes over 1. It hit 1.08 at the close on Friday, despite us closing positive. And me and TSR chatted a bit on maybe how it got there and, some short covering or whatever. But it's not really, I think, so important as to how it got there, but how the market reacts when it gets to that 1.0 spot or above. And you can see, these green arrows mark each time that, it spiked over 1.0 this year. And it's been pretty accurate at marking lows. It's not very accurate in a, deeper, more violent correction like we saw in April. But when you're in an uptrend, it can be pretty accurate in, marking a floor. So that is something I'm keeping in mind because to me, with that closing over 1.0 on Friday, even though it may seem like the narrative has shifted pretty quickly over the weekend, I think that positioning may still be offsides coming into today. So you might have a flood of money coming in of people trying to get back exposure that maybe necessarily were like caught off sides on Friday by the recovery into the close. Didn't get as much exposure as they want. You see the narrative shift so quickly over the weekend, and then now they're going to be rushing to get exposure back to start the week. Um, and as well as any shorts on the market who are like trapped lower from Friday on like a huge gap up like today. That makes me think that this has a very low likelihood of fading off today, personally. So that's just kind of my bias today. But back to where I started. I don't do well on Monday gap ups. This is a huge gap up. I mean, this is over a full ATR on the Qs. So it's going to make things a little bit tricky. Right back up in a resistance on the market. So a lot of gap ups across the board. I mean, almost everything on my watch list is green. All indexes green this morning. I have a list of about 15 to 20 names that I'm going to keep an eye on today. That I am interested in, just kind of based off weekly charts. I did a lot of weekly chart scans this weekend, just to zoom out a little bit and get a look at maybe what are some stocks that actually have clean basis if the market is going to resume higher. And I think I got a pretty good list going. I won't go through all of them this morning. I'll kind of probably talk about them and touch on them throughout the day. But today's going to be kind of just like a monitor my watch list kind of day. I want to see what acts well, what doesn't, kind of water the flowers, cut the weeds kind of thing. So just going to kind of be a monitor the watch list day for me. I really don't plan on being active. My trading activity was pretty damn low last week just because wasn't necessarily ready for like the short side. It wasn't anything I really cared to catch, but it made it pretty easy to sit out last week. Nothing on my watch list really triggered. I tried some like IWM early in the week off the 50-day, and once I got no traction on that, I was like, market's giving me a signal here. to just kind of just slow down a little bit. So, but I really love the close on Friday. Love that, we kind of undercut the obvious spots and reclaimed on some things. But yeah, just going to be kind of watching some things today, see how some of my stocks on my watch list act, and kind of go from there. Pretty easy to make some stupid mistakes on a big Monday gap up like today, especially when the market reverses so hard like that off of a pivot. Because it was pretty easy Friday morning to kind of just days over, right? I mean, I kind of agreed with you. I'm not gonna lie. And we saw a couple signals. I came back to the desk and I was like, you know what? Let me take a little bit of a deeper look. And I'd mentioned that we saw some of those momentum kind of high beta basket names that maybe peaked before the indexes did and maybe started this mini correction. Um, weren't seeing as much selling pressure as the indexes and mega caps early in the day on Friday. And to me, that kind of maybe was an early signal that individual stocks could be giving us a signal of like a short term low before the indexes. And, just like, for example, the rare earth theme, right, which has been bidless since the IWM peaked in the middle of October, finally reversed Thursday into Friday. And then, seeing the indexes kind of fall through to the close on Friday after that is not really surprising. So, was like a long and kind of draining kind of week watching the price action last week. So I wasn't ready to put on a bunch of exposure at the end of the day Friday. It was a nice opportunity for those that did want to maybe start trying to get some progressive exposure, as the 50-day on the indexes is especially a rising 50-day in an uptrend, is a pretty logical area for the indexes to find support, as we saw earlier in October as well. Um, so yeah, stick to your plan this week. I'm sure everybody did a lot of prep work this weekend and kind of, know what they're looking for. Have a checklist, right, of what you'd want to see to maybe, get some exposure back, or what you'd want to see to maybe take off some exposure you put on, or even slow down even more if we, if I mean, some sellers could step in here at this spot. I mean, we saw plenty of sellers here last week. But I think there still are a lot of people offsides. They're going to be rushing to get back exposure. So it kind of makes things interesting. Close today is going to be important on the indexes and a lot of stocks I'm watching. But I do not plan on being very active today and buying a bunch of things or, stuff like that. So, um, yeah, that's what I got this morning. You're muted.
um some of those just little subtle hints that were way different than Thursday on Friday. Like you said, Thursday it was like twice as nasty underneath the hood and across the screens. I mean, People Wish posted that list of, some of the growth leaders, and I mean, some of them were down 20-25%, a lot of them down, 8 to 14%. And then Friday early in the day, as like I said, as the Qs went from negative 0.6% to negative 2.1% throughout the day, it was intraday. Some of those leaders were not making lower lows. They were only
Yeah, you
down.
could almost look at that Thursday, like how that screenshot we talked about on Thursday from People Wish of like stocks just like destroyed, especially the ones that got hit in after hours on earnings and stuff. That kind
Mm,
of maybe could have been viewed as like a final like capitulation kind of in
mm,
that most shorted. One time calls it the most shorted basket. I kind of like that name because that was the theme like the
yeah,
in September and October. So
yeah, and they were down quite a bit. And again, to see that little subtle shift in the tape was what should have what some signal. Um, I the one area of the market I didn't mention, which I don't know if it's fully ready yet, but I'm still tracking it. I've posted about it, multiple times, so I wanted to bring it back up. Is this the Argentina ETF? ARGT had this big gap up of 20%, following the Argentinian elections. And since drifted back to the MAs, pretty much solely focused on GGAL and YPF. I had posted about some other ones, some of the utilities, CEPU, PAM, and some of the other banks. But yeah, I'm still tracking this. Um, and again, I kind of wanted to re-emphasize some of these software and cyber stocks. that we've been looking at, Snowflake. Um, we had talked about this for a brief period last week. Is, if the indexes do hold at the 50 SMA, I'm curious if some of those subtle signs of stocks that only pulled back to their 20 MA, are those relative strength names, the ones that weren't able to sell down versus like a Nvidia, right, that pulled all the way to the 50 SMA. Is it going to be things like Snowflake, like Zscaler, like CrowdStrike, like MDB, right, that only pulled into these spots in a very orderly manner. Um, MDB was green on Thursday, up 1.6% versus the Qs down 1.8%. And then you saw Friday, it, essentially almost bearish or bullish engulf up 1.5%. We're engulfing Thursday's candle here today. So some of those subtle hints and not just hour by hour, day to day price movements, but the location that they're moving from is very important. And we talked about that on like things like Hood back here in April, the how it's pulling into the 200-day moving average. You look at some of the biggest winners since April. Again, not comparing that in the slightest, but just this was just a very obvious and strong sign of relative strength and the location in which that's occurring from, right? It was right at the 200-day moving average, where the QQQs at the time were down 15% from their 200-day moving average. But did this necessarily show like day-to-day relative strength? No, not really. But the location in which that was occurring structurally was very notable and beneficial. Um, Market opens in 5 minutes here. Everybody's got any questions, comments, concerns? Let's go. Yeah, I do share the similar sentiment as Bracco. SEDG. Yeah, it is interesting. Obviously huge reversal on Wednesday. Well, this whole area of the market, right? CSIQ, kind of leading the charge. Run was weak on Friday after their earnings. FSLR is kind of the big dog of it all. But yeah, SEDG, you got a pretty clear level up here, about 42, 41.75 ish, give or take, for the breakout-ish area of this. Big reversal on Wednesday's earnings, inside day Thursday, and then upside reversal on Friday. Ideally, maybe dangles for a little bit longer here. Don't know if I'd be able to take this, man. I would have been really interested in the reclaim of the inside day. I obviously wish I would have taken it there, which probably, looking at this chart, is like the ideal spot. An entry as you reclaim the inside day low, with a stop just below the 50-day moving average, risking about $2.20, probably ideal. And then you're already up, 1.5 to 1 risk to reward when you're breaking that level up at highs. So I'll probably need something a little bit cleaner on that for me to get in. But yeah, I group these in the energy storage area of the market. We've talked about that for a while, that these solar companies are not looked at as solar manufacturers, but as energy storage businesses. For the most part, NXT is actually probably the institutional leader. All righty. Market opens in a minute and 30. Don't blow your loads right away.
All right.